you doing? My name is Roger Gitonga, and I'll be taking you through chapter 19, which is known as the ethical considerations. Now, just based on the picture, you realize that when we are dealing with this chapter, we'll be looking at the different decisions, the different decisions that we constantly make every single day. Are we doing the right or wrong thing? And how would we know if we're doing the right or wrong thing? So, ethics just goes beyond just following the law. Ethics is based on your values, it's based on your beliefs, your morality. So there's a lot that we're going to be learning in this chapter. Now, as we introduce this chapter, I want us to understand that the law is the minimum level of behavior required. And any standard of behavior below it is actually considered illegal and warrants punishment by the society. Now, when you meet non-legal regulations like rules at the workplace, then you meet a higher level of behavior than just the legal or the law. Okay? The legal requirements of the law. But with ethical behavior, it is seen as the highest level of behavior that society expects. Your behavior goes further than just meeting your legal and non-legal obligations, So there are times when maybe it is not, there's no law that will ever forbid you from dressing in a certain way, but because of your values, your beliefs, you feel that it is ethically right to dress considerate or dress modestly. And basically this is just your own stance, so ethics goes higher than just the law. As we talk about corporate governance concepts, if you remember, corporate governance was a system by which companies are directed and controlled. So some of the concepts we'll be dealing with here is fairness. Be fair as a person, be fair as a manager. All right, treat your employees equally right. Openness and transparency. Don't hide anything, okay? With everything that you do, with every decision that you make, especially if it's going to affect the company, either both positive or negative, it's very important for you to be open. Probity or honesty, be straightforward in what you do, okay? Responsibility goes hand in hand with accountability. As a manager, you have the responsibility to take the company in the right direction. And if you do anything that is wrong or anything that warrants questioning, then you're accountable to answer. When it comes to reputation, there's someone who was saying, Warren Buffett was saying how important it is for a company to maintain their reputation, because even if your goods are so good, even if your product is so good, if your reputation is tarnished, then your sales will drastically go down. Now, with ethical behavior, we're going to be looking at ethics based on consequences first and foremost. Now, you can see their picture saying that anything you say can and will be used against you. Now, the reason why I put this picture up is because I want you guys to think about those times when you stopped yourself from doing the wrong thing because you are scared of what might result from it. We would be scared of stealing because we'd be scared of being caught. So you're ethical because you're scared of the consequences, because you are worried about what might happen from my action. So that's what we're going to be dealing with in this slide. Now, this approach judges actions by reference to their outcomes or consequences. Now, we have the utilitarianism, which can be summed up as choosing the action that is likely to result in the greatest good for the greatest number of people. So the times when you want to do something, but you have to consider how your actions are going to affect other people because you're scared of the consequences. Remember that. So you would basically choose, okay, the action that will affect people, okay, or will be for the greatest good of the greatest number of people. And that is what utilitarianism is about. Then we have egoism. Now, the saddest thing with egoism is that it states that an act is equally justified if the decision makers freely decide to pursue their own short-term desires or long-term interest. So here the subject to all ethical decisions is self. So when you want to make a decision, or you want to do an action, you only think about yourself. You only think about how it's going to hurt you, and that is, or how it's going to benefit you. And we call this egoism the ethics of a thief, because a thief will steal from you and they'll not care whether it hurt you or not, but they'll want to look at how they would benefit. Then we have pluralism. Now, with pluralism, this accepts that different views will exist on morality, but suggests that a consensus or an agreement may be able to be reached in certain situations, which is not always the case. So, with pluralism, it tends to take into consideration everyone. That let's do this. Yeah, if you want to do an action, let's come together and agree what is right, and then we can do it. But you see, because we are humans, sometimes we don't just come to an agreement. There will be a lot of conflict. Everyone wants this, everyone feels that this is the right thing to do. So this pluralism is quite hard to achieve. Then we have here ethics based on duty or deontology. Now, deontology is Greek for duty. The first thing we're going to look at here is ethical relativism. Now, it is the view that a wide variety of acceptable beliefs and practice actually exists. Now, it is more flexible, especially for multinational companies who deal with different countries and cultures. Now, you see, with multinational companies, they know that they have employees from everywhere. So they're very careful to note that they have to accept people the way they are. So when they adopt the ethical relativism, they're saying that, hey, I know we have Christianity. Hey, I know we have Islam. Hey, I know we have Hinduism. We have Judaism. We have, all the Buddhism. And they also know they have atheists. So they will basically try and make sure that they do not hurt anyone's feelings, and they accept that people have different beliefs and practices. Now, the saddest thing is that it leads to a philosophy of anything goes, denying the existence of morality. Because you see, if everyone feels that, hey, this is what I believe in, and you end up taking that, then how would you ever come to a situation or a conclusion that this is the right thing to do? If everyone felt that they should dress how they feel like dressing, then it would be so inappropriate, because at some point you'll have people walking naked and they'll say, hey, listen, this is my belief. But you see, that would offend other people, and so you realize that this tends to give rise to the philosophy of anything goes. As it comes to ethical absolutism, now this view states that there is an unchanging set of ethical principles that will apply in all situations at all times. So what we see here is that there are some rules or some ethical beliefs that we knew would never change, be it either 100 years ago or now, or the current date. And that is why I give an example of thou shalt not kill, because be it in the 80s, be it in the 1800s, be it now as we speak, in the 21st century, thou shalt not kill is a rule or a principle that will never change, and it will always be seen as wrong. Now, it lays down certain clear rules that people are able to follow, knowing that their actions are right. So at least I know that, hey, stealing is wrong, and that will never change, and that will guide my actions to stop me or prevent me from stealing, to prevent me from killing, to prevent me from lying, and the likes. It also takes no account of evolving norms, because you see, the thing is, it says that, hey, this rule will stand forever. But what will happen if in time or later on some of these things that we consider wrong are considered right? What would happen? Now, there's some ethical problems that face managers. Now, let's look at them. The first one is bribery, okay? The second one is grease money. Now, grease money is where multinational companies are sometimes unable to obtain services to which they are legally entitled because of deliberate stalling by local officials. So they'll have to pay cash to the right people so that they can oil that machine of bureaucracy. Now, what happens here is that there's sometimes a company might have demanded for a license and or something of the sort. And you'll find that in the local offices, they tell them that this license is going to take 3 months, but maybe the company needs that license in the next 3 weeks. So what they do is that they say, listen, okay, I understand it's going to take 3 months, but I can't wait for that long. So what they do is that they pay the right people so that these right people can make the process move faster, and so that the company can actually be able to achieve their license within those 3 weeks. And you can also get gifts. Now, gifts can be a problem because sometimes if I, for instance, give a manager a gift worth 500,000, let's say $50,000, the manager might look at it as a gift, but later on I'll remind him and tell him, hey, can you do me a favor? Do you remember I gave you a gift? Why don't you compromise and do this for me? So you see, now you start to affect him. You start to affect his independence. Now, ACCA Code of Ethics, the first one is integrity. Now, this point is so important because you'll not only see this in your accountant and business paper, but you'll also see it in your audit and assurance paper. You're going to see it in your strategic business leader paper. So it's very important because this is what we stand for as ACCA members, affiliates, and students. So the first one is integrity, which means you have to be honest and straightforward in everything that you do. Objectivity means you need to be independent. That means you're not easily influenced, or you're not going to be biased. Confidentiality basically means to keep things private. Not everything should be leaked out. Professional behavior means that you should act in a manner that will uphold the profession. Professional competence would mean that you have the necessary skills to do the job, while due care means you're diligent in what you do. Now, professional and personal qualities that are expected of accountants are, with the professional qualities, we are expected to be independent, and I told you this means to be free from bias. Be skeptic. This means be curious. Don't always let everything pass you. If you find that something is weird or curious, or something is unethical, ask, question, put this person at ease, not at ease, but put them uneasy, make them feel like you've detected something wrong and you're about to discover it, so that you're able to detect any fraud or error that might occur in the company, and no one really cares about it but you. 3, accountability. All right, if things are going to happen, be ready to take or be accountable for your own actions. Social responsibility. As an accountant, we tend to give back to the society. If anything goes wrong in terms of funds, we are affecting the society because they trusted us with the management of that company. So it's very important for us to be socially responsible. Now, the personal qualities: be reliable. Let people know how to trust in you. Be responsible, okay? Very important. Timeliness: provide the information at the right time. Make sure that you're beating deadlines. Don't delay too long. Be courteous, okay? And respect. Respect your customers, respect your managers, respect your fellow colleagues. Respect people. Now, threats to an accountant's independence. This is one of the most tested areas in ACCA, and not just in accounting business. And the first threat is conflicts of interest. As an accountant, we tend to go through this threat, conflicts of interest, where maybe we have our own interests, but the company has its own interests as well at heart, and our interests tend to conflict, and then that might provoke us to compromise and do things that are just going to benefit us and not just the company. So we say here that if members or shareholders compete directly with a client, or have a joint venture with a company that is in competition with the client, that will bring this interest. So if you compete directly with your client, let's say your company is also in competition with your own clients, then that will conflict interest, because when your client calls you to do some work for them, you might not do the best job because you remember you are in competition with them. As you can see in this picture, the guy is so confused. He's wondering, should I do what I want? Should I do what the company wants? Should I do what my client wants? Very important to note. Then the second one is self-interest threat. Now, the self-interest threat, we see here that this occurs when a staff transfers between a firm and a client. Now, I want you to imagine that you are ideally an accountant or an auditor, and when you go to audit for your client's company, you want to impress them so that they can employ you as their accountant. Now, you see what you're doing here is that you're thinking about your own self. So even as you do your work, you're going to do work that will please those managers, to please your clients. Rather than doing the right thing, you might do the wrong thing so that you can please them. And this might tend to bring up the self-interest threat. And we see here that also a partner or an employee of an audit firm should not serve at all on the board of a client. Here you just think about me, myself, and I. And the third one is the self-review threat. This is a bit interesting because it happens here. This is how it happens. And this can occur where an audit firm provides services other than audit services to a client, and then reviews his or her own work during the audit. So you can see here that the times when I could be the auditor, but my client requests me to do their accounts. As I do their accounts, I will also audit those accounts that I did myself. So of course, since I know I'm the one who did the accounts, I may not judge myself harshly and say that oh, I detected this error, but rather I will say that hey, these accounts are fine. So as you can see, there is a picture of one of the Simpsons, Homer Simpson. As he looks at himself in the mirror, he knows he's fat, but as he looks at himself in the mirror, there's this deceptive lie that he's actually strong. And it's the same thing here. We know that as an auditor, if we were to review our own accounts, I would be deceptive and say that the accounts are right and maybe they're not. The fourth one is advocacy. Now, as you think of the word advocacy, you should think of the word an advocate or a lawyer, all right? So this arises in certain situations where the audit firm is in a position of taking the client's part in a dispute or somehow acting as their advocate or lawyer. So you'd find here that there are times when maybe your client is not in is in a big of an issue or is in problems, and they call you to come and defend them. Now if you do this, you might, because you want to please your client, as you defend them, you might defend them wrongly. Maybe you're saying the wrong things, maybe you're saying things just to make them win the case, but at the same time the things you're saying are wrong. These are things you need to be very careful about. The fifth one is familiarity. Getting too familiar, too close with your client can ideally compromise your independence or threaten your independence. So we say here that independence is at risk when an audit firm and its staff become over familiar or too close with the client. Then six, intimidation. Now it arises when members of the audit team have reason to be intimidated by the client. Sometimes the client can tell you, hey, listen, I know you detected this error, but don't tell anyone. And if you do, you're going to lose the audit. I'm going to cancel our contract and I'm going to spoil your reputation. So you as the auditor, you realize that this is going to put you in a big of a mess. So what you do or what you decide is that because you don't want to spoil your reputation, because you don't want to lose the audit or the job, you basically do what your client tells you to do, and you end up being threatened, and you end up doing the wrong thing. So those are the 6 threats of that can ideally threaten the accountant's independence. Thank you so much for listening to me. I hope you learned a lot. I wish you the very best in your accountant in business. Remember, this is the last chapter, and I hope that as you've been going through with us, you've been learning quite a lot, and this material that I have provided to you will help you to not just pass the paper, but pass it really well, and also understand it and apply it in your day-to-day situations at your workplace, or even with your colleagues, or even your family, wherever you go. Thank you so much.